Welcome back to Chainmind. Today, we're diving into an action-packed week in crypto. From Bitcoin's rollercoaster price swings and Ethereum's struggles to Bhutan's surprising Bitcoin stash and major corporate moves like Visa's crypto expansion and MicroStrategy's bold BTC goals, it's been nothing short of a whirlwind. Stick around as we unpack the key developments that could reshape the landscape and reveal what they mean for your investments. The week kicked off with Bitcoin in the spotlight, captivating traders with a volatile price movement. Starting around $67,000, Bitcoin showed strength, surging to a high of $73,620 before retracing to $70,000. Traders felt the excitement of a potential bull run, only to find Bitcoin pulling back. With eyes on how BTC will close out November, investors are holding their breath, knowing that Bitcoin's performance can set the tone for the broader market. Right beside Bitcoin, Ethereum made its own attempt to rally, trading around $2,400 before peaking at $2,722. Yet, unlike Bitcoin, Ethereum couldn't break out of its long-standing range and found itself back at square one by week's end. This lack of upward momentum has frustrated Ethereum holders, raising questions about when we might see ETH make a real move and how this impacts its long-term growth potential. Meanwhile, in a fascinating development outside the usual crypto hotspots, Bhutan has emerged as a significant Bitcoin player. With nearly $780 million in Bitcoin holdings, Bhutan ranks as the fourth largest government Bitcoin holder worldwide. Unlike other countries, Bhutan's Bitcoin stash comes from eco-friendly mining powered by its vast hydropower resources, partnering with Bitdeer to expand its mining capacity from 100 to 600 megawatts. Bhutan aims to grow its reserves while setting an example of sustainable crypto mining. South America also made headlines, with Brazil's crypto imports soaring by over 60% through September, surpassing last year's total. Stablecoins accounted for nearly 70% of these transactions, showing how crypto is increasingly woven into Brazil's financial system. Major players like Coinbase and Ripple are expanding into the region, capitalizing on the country's growing appetite for digital assets. For investors, Brazil's crypto adoption signals a larger trend in emerging markets where cryptocurrencies provide financial access and stability amid economic volatility. On the corporate front, MicroStrategy, the American business intelligence giant, has doubled down on its Bitcoin strategy, boasting $8.4 billion in unrealized profits from its BTC holdings. With over 252,000 BTC at an average price of $39,292, MicroStrategy's move solidifies its position as one of the largest corporate holders. This bold bet underscores CEO Michael Saylor's belief in Bitcoin as a digital gold standard, and it may inspire other companies to consider Bitcoin as a strategic asset. Speaking of Bitcoin as digital gold, Florida's chief financial officer also made waves advocating for a strategic Bitcoin reserve. Labeling BTC as digital gold reflects a growing sentiment among state officials in the US, highlighting how digital assets are gaining recognition as an alternative financial safeguard. This trend could have far-reaching implications, especially if other states consider adding Bitcoin to their financial reserves. Visa, another major player, has entered the crypto space with a new partnership with Coinbase, allowing for instant crypto purchases on debit cards. This move makes crypto transactions more accessible, blending traditional finance with digital assets. With Visa's reach, this partnership could accelerate mainstream crypto adoption and simplify the purchasing process for everyday users. MicroStrategy wasn't done yet. They unveiled their ambitious 21-21 plan, aiming to buy a staggering $42 billion in Bitcoin over the next 3 years. By raising $21 billion in equity and $21 billion in fixed income securities, MicroStrategy could transform into a quasi-Bitcoin ETF, further embedding BTC in the corporate world. This plan, ahead of the 2028 Bitcoin halving, could impact BTC's scarcity narrative and create ripples across the market. In ETF news, crypto asset manager Canary Capital has filed for a spot Solana ETF with the US Securities and Exchange Commission. This follows Canary's recent filings for a spot XRP ETF and a spot Litecoin ETF in October. With Van Eck and 21 shares also in the race, Solana could be the next major cryptocurrency to see a spot ETF approval after Bitcoin and Ethereum. If approved, the spot Solana ETF would enable investors to gain exposure to SOL without the need for direct ownership, potentially driving up institutional interest and liquidity in the market. Additionally, firms like Franklin Templeton and Bitwise have shown interest in Solana, signaling broader institutional support. Politics is also at play in crypto's future. Former President Donald Trump, a vocal figure in the crypto space, has promised to end Kamala's war on crypto and Bitcoin. His stance resonates with a segment of the market hinting that regulatory shifts could be on the horizon depending on the election outcome. With Trump's pro-Bitcoin rhetoric, investors might see policy changes that favor crypto adoption and reduce regulatory roadblocks. Argentina took a unique cultural approach by blending art with crypto. The Central Bank of Argentina unveiled an exhibition showcasing destroyed currency and active Bitcoin miners, symbolizing the transition from traditional money to decentralized digital assets. This bold move aligns with the nation's economic struggles and demonstrates how Bitcoin and Ethereum could play a role in a more technologically driven economy. However, not all news was bullish. November 1st marked the first net outflow for Bitcoin spot ETFs, with $54.9 million exiting, followed by a $10.9 million outflow for Ethereum. This shift signals that some investors are beginning to take profits, possibly as a cautionary move amid volatile market conditions. Additionally, several other major funds reported moderate outflows, suggesting a short-term dip in institutional enthusiasm for crypto ETFs. For crypto holders, these outflows serve as a reminder of the need for caution and diversified strategies in a market known for its rapid fluctuations. Finally, with the US elections around the corner, the crypto market is on high alert. Speculation is rampant. If Trump wins, Bitcoin might see a temporary dip due to profit-taking, but a potential rally could follow as optimism returns. Conversely, if Kamala prevails, the market could see a more prolonged downturn, given her stance on crypto regulations. Analysts speculate that large-cap altcoins like Ethereum and Solana could suffer the most in a bearish scenario, while Bitcoin may retain some strength as a relatively safer digital asset. This uncertainty is fueling both excitement and apprehension as investors weigh their positions ahead of this pivotal moment. As we navigate these developments, one thing is clear: crypto continues to evolve at an incredible pace. From government adoption and corporate investments to regulatory impacts and cultural shifts, each event reshapes the market. For investors, staying informed and adaptable is key to navigating this dynamic landscape. Thanks for watching Chainmind, and remember to subscribe to stay ahead in the world of crypto.